Hello guys, welcome to another class, and for this class we're going to be teaching Trendline Breakout strategy. So the first one we thought was Trendline trading strategy, how to trade with the trend. Now what happens when the trend gets broken and the market is no longer moving in that trend? That is what you want to learn here, Trendline Breakout strategy. And for this class I'm going to be teaching you Trendline Breakout strategy. You're going to be learning some basic Trendline breakouts techniques that you too can apply to your own trading strategy. Now because of that, I just chose not to remove all the trend we were drawing previously on the market. Now you can see all the various trends that we've drawn on the market, but what happens when the trend breaks out? Like scenarios like here when the trend breaks out, scenarios like here when the trend breaks out, scenarios like here when the trend breaks out. For example, here when the trend breaks out, scenarios like here when the trend breaks out. What happens? What do you do? How do you benefit? How do you take a trade from such illustration? So what you want to do, there are two ways of trading Trendline Breakout strategy. Number one is that when you get a new, for example, this is a Trendline Breakout strategy. Now this is a trend line and this is the breakout. So for the trend line to confirm that it has broken out, you want to either see a slow down in the price and the market push away out of the trend line. So you might see the market slowing down a little bit, then finally push far out before coming back to touch the trend again. So market will most likely come back to retouch the trend and continue going in the other direction. So I'm going to use illustrations just like I always do to explain this for you guys. So for example, we have a bearish trend moving like this, and we now have a breakout and the market now comes back like this. Let's say we must have drawn our trend line like this. Now if you look very closely, you would understand that there is a very vivid observation here, is that after the trend line breaks out, market most likely comes back to this our previous trend, taps into it before continuing in the opposite direction. So this is the first entry you want to get for a trend line breakout strategy. So these are the entries you can possibly get for a trend line breakout strategy. Number one, you can choose to trade immediately after the trend breaks out. You put your take profit at the previous high or the previous low, depending on the direction of the market. So this is the previous high, this is another high. You can choose to put your take profit targets. Remember I told you, you are not the one in charge of the market that tells you where to put your take profit and where to put your stop loss. You can put your take profit immediately the market breaks out of the trend. You can put your take profit at any of these highs and your stop loss significantly below the last low as the market breaks out of the trend. Remember, as the market breaks out of the trend and you take the trade, this is going to be a 1:1 risk to reward trade, which is a very good trade, I told you. Or you can take another entry when the market breaks out of the trend, pull backs and touch the trend again on the other side of the trend before continuing to the new direction. So you can always take the trade after the market has pulled back and touched the trend again. You put your stop loss below the last low, which is here. Don't forget, your stop loss should be below the last low, which is here, for a trend line breakout strategy. And your take profit, now you now have a new high which is above the previous trend, and you want to put your take profit above the new high. And most of the time the market will come and you have a 1:8 risk to reward, which is also a very good trade. So let's go to live market and let's see how all this thing plays out in a live scenario in the market and how we can benefit from it trading it live in the market. So now for this example, we can see that there was a trend forming, a buy trend, which is all the way from here, formed all the way to here. You can see a buy trend forming, and we have a breakout at this point of the trend. We have a breakout at this point of the trend. Market aggressively broke out. So if you had bought from here, at this time, you probably must have taken a loss when the market broke out of the trend. The market must have hit your stop loss. If you're trying to buy back after the market came back to this trend, and you would have most likely taken a loss. That's why losses are a part of the market. Losses in the market is just a significant area where you know that if the market gets to this area, you don't want to be in the trend anymore, you don't want to be in the trade anymore, you want to be outside. So you need losses or stop losses to help you guard yourself from a trade that is no longer going in your favor, even as much as you are using low leverage. But now, since you've already taken losses or taken this loss, you now know that, oh, the market has broken this trend. You now want to trade a trend line breakout strategy. So you can choose to either trade it immediately after the market breaks out the trend, and you put your stop loss significantly above and your take profit at this previous low, or you can target this low here as your take profit. And you see what the market did. The market came back to hit the low. You have 1:5 risk to reward. Even as much as the market has broken the trend, the market tried to go back, but instead it came back to touch the trend before continuing lower. So you have the first entry here, which you would have been able to make good profit. Then you have another possible entry here where the market came back to touch the trend. Your stop loss still above here, and your take profit at this last low, you would have gotten another very good, probably 1:2 risk to reward trade. Then let's take another example again. This is a trend line. You can see how the market broke the trend here, and you could have been able to take your first entry here with your take profit at this high, or your second entry where the market came back to touch the trend, your stop loss significantly below, and your take profit above. So this is just basically a trend line breakout strategy. You can see it here. The market broke this trend here. After breaking the trend, you could have taken your first entry as the market was breaking the trend, your stop loss below here, somewhere significantly below, your take profit at this high, or you look for a next high somewhere as far as here, and you see the market went as far as here to hit take profits for you. Or you wait till the market pulls back to the trend line and you continue trading from there. See another breakout example here. The market broke out of this trend line here. You should have been able to take, based on trend line breakout strategy, put your stop loss significantly above, somewhere maybe above this previous high, and your take profits below the previous next low, and the market will have just come quietly to hit your take profit. We have another scenario here where the market broke this trend, this sell trend that was happening here. You took a trade around this area, your stop loss above this previous high, your take profit above the previous high, your stop loss significantly below the previous low, and you get your 1:2 risk to reward trade, which is very good. Then next example, we have this two. You can see it. I'm just picking it out very easily, even from the previous trend we drew. Market broke out the trend, you take your entry here, you put your. So most of the time, trend line breakout strategy even works better than trading the trend itself, because as soon as the market breaks out of the trend, the entire trading industry already knows that there is a new trend forming, so they want to easily catch the breakout of the trend. But the thing is, your stop loss and your take profit or your risk to reward does not really go above 1:2 risk to reward, because you are targeting the next high, whether it's this high or this high, you are targeting the next high, and you most likely would not get above 1:2 risk to reward. So that's something you need to take note to, that you most likely will not get above 1:2 risk to reward. So once you finish having a breakout of the trend, you can now start looking for your point A at this area. Your point A, you've broken out of the trend at this area. You've broken out of the trend at this area. You have your point B here, then your point 1. So after breaking out of the trend, you can now switch back into trading trend line trading strategy and pick your point 1, your point 2, and so on and so forth. Now you can see this trade here, the trade is already going in profit. So that's basically the rules of trading trendline breakout strategy. So since you know how to trade a trend, you can always know when the trend is breaking and how to join them to trade the breakout of that trend, which gives a higher win rate. Trading trendline breakout gives a higher win rate more than even trading the trend itself. I repeat, trading trendline breakout gives a higher win rate more than even trading the trend itself. So we have all that, and that's that for this class. Bye.